all of these fintechs basically blew up and survived because they had a lot of crowdfunding VC capital pouring in, but the actual money making mechanisms and the actual maintenance aspect of it, right? You know, when cash is cheap, they were able to kind of get over that gap. But as, monetary policy changed, and that money dried up, they didn't really have a way of maintaining that banking as a service infrastructure without basically changing their whole fintech banking paradigm, which, the customers probably wouldn't want, right? Like a lot of these fintech banking partners are like very targeted. Are you a socioeconomically challenged person who, is struggling to get a bank account or doesn't have a lot of money to pay regular, account fees or have all of these different fees that banks charge. And so, you signed up for this service to help you build up a checking and savings. Mm-hmm. But, if they would have charged you a $15 account fee on a monthly basis, you probably wouldn't have chosen them.
Correct. It's just it's very sad because you do have the customers that do not realize that they're not dealing with a FDIC actual bank. And so if anything could happen, just like what's going on now, customers are without their money. So and the customer's like, whose fault is it? It's your fault, fintech. And fintech is like, no, it's the bank's fault. It's like everybody is pointing a finger with each other. So I can see this as being, it's a downfall.
Well, and allow me to be highly problematic for about 2 seconds. I also think that, for the past few years, we've had a very aggressive consumer protection finance bureau. So, is that come January 2025, is the pressure of regulatory compliance then going to become more laxed? And depending on how monetary policy changes, right? We just had a Fed rate cut. The Fed is supposed to be independent, but that could honestly all change. And so while I think this article is prescient to the time that it was written, which was for a very particular administration in the US, does it hold true past January 2025 if the Fed is no longer independent and there is less aggressive consumer protection out of that bureau? Problematic rant over.
Indeed. Something I want to share based on everything you're saying, guys, is that so first, when it comes to fintechs, I think profitability is definitely becoming the topic now that the cash is really expensive. While a few years ago, fintechs were about increasing their customer base, right? The number of customers, the number of accounts. Nobody cared really about the money they were really making. So I think they could really go, as you were saying, to those customers that were somehow unserved by their banks because they couldn't open a bank account. Maybe they found some funny services with those fintechs, and it was either for free or really not expensive compared to a traditional bank. So that's something that is really changing. So fintechs are running out of money, and they are either going to partner with banks or they are simply going to bankruptcy. They cannot work anymore. So I think that's definitely a topic, and at the same time that creates a huge risk, because what happens with those fintechs when things go wrong, and who protects those customers? And somehow banks, I'm pretty sure they're starting to realize that those customers, to some extent, belong to the bank because they are in the relationship. So, contact is getting really, really tight, and people are starting to realize that there is a huge risk, and that we are talking about money here and about real customers. And something that it also made me think about what happened here in Europe, and in particular in France a few years ago with terrorism and these sort of fintechs opening bank accounts for people that were unbanked or with people, without really doing a proper KYC. It became really strict, and probably this is something for other reasons that what is happening in the US, and probably the same will be happening in Europe as well.
Yeah,
Basically.
yeah, the article is great. I think there's also a consideration of consumer data protection within this as well, right? Like banks have very serious regulatory compliance around protecting your data, right? A fintech does not necessarily have that same requirement to protect your data. So there's also concern about if these companies fold and they're trying to recover assets or they're trying to basically get sold off, right? Just then all of the data related to their customers, does that have a value? Can someone buy that, right? Like, we know what all of these customers, we know all of their spending and savings habits. So I have concerns over, consumer data protection as well. If you're not in a strongly regulated industry, who's protecting your data?
That is a good question, but I think some of the fintechs too. I read a little bit more deeper into these. That fintechs normally and generally work with small banks just to really just keep them alive, right? And to avoid the regulations that these big, Wells Fargo, they have to go around it. So I think that is becoming a more and more bigger issue too. For, like you said, the privacy, the security of the data. So I believe that is one of the biggest issues as well. But their fintechs are going to smaller banks, and those smaller banks are partnering with them because it's like that's the only way they can compete with a Bank of America, anything like that.
Yeah. The smaller banks, right? They're looking to grow, they're looking to find new revenue sources. And so these types of arrangements are very attractive to them. But also at the same time, you don't have the same amount of resources to dedicate to maintaining those connections.